So, what you want to talk about?
To the moon, baby. Let's go.
What moon?
The stock market moon.
The stock market moon. Who came up with that?
I have no idea. Wall Street bets, probably.
Okay, let's talk about it.
So what is the stock market?
Imaginary people that come together and sit there and decide the fate of the world.
So the stock market is an exchange where companies come together to raise capital so that they can fund their projects.
I was thinking of Wall Street.
And bring products to the market easier.
I think I was thinking of Wall Street.
Now, over time, the New York Stock Exchange, also known as Wall Street, has become the most popular one.
Okay.
Right?
Yeah.
Why? Why is it so popular?
Oh. I didn't catch the cue. Okay, why is it so popular?
Because it's in New York, baby.
Okay.
Biggest, best city in the world, right?
That's what they say, but...
Till they tax you
90%. Then y'all come and move down here to North Carolina and then raise our stuff up. But thanks. We appreciate you.
I appreciate the appreciation.
That was a good one. As long as my taxes don't go up, y'all can appreciate all y'all want.
You got it, yeah. We had to argue that. For sure.
Yep.
So why is the stock market so popular now?
They've made it very easy for the normal person to sit there and trade, I think.
So in 1971...
Oh, I was talking about recently.
They took the dollar off the gold standard, right?
They took the
United States dollar.
You mean they took the gold off of...
They took the dollar off the gold standard. It's not backed by gold.
Oh, okay, I gotcha. Okay.
So, no longer was it prudent to save money. Because the value of the dollar, as you print more of it, decreases.
Yeah. Okay.
Because it's not backed by gold.
Interesting.
So, when you look at the trend in the stock market, you'll see that in 1971 it drastically starts increasing. Right? So, if you're not making anything at the bank on your money by saving it, you're losing money in the bank by saving it. You have to find another way to allocate your capital so that you can earn a residual income, earn money off of the money that you have. Basically, to even keep up with inflation, which is usually 2% a year. This year is probably going to be more, but so that's why the stock market gained popularity, right?
Because people weren't saving money anymore?
Because you weren't making any money by saving money.
Oh, okay. Okay. Well, I thought you meant like most recently.
So why recently is it so popular?
Because they made it more accessible to people. They've come up with different apps and stuff that you could do from your house. You don't have to have a professional anymore.
Is that a good thing or a bad thing?
I mean, I feel like it's a good thing, but at the same time, that whole incident with AMC and GameStop, like, to protect the person who could be less knowledgeable, meaning like the normal people like us, they literally shut down people from being able to trade.
You could sell the stock.
Because they thought that, yeah, but you couldn't buy it.
But you could not buy.
But that's what I'm saying, because they were trying to protect the average person because they're not as knowledgeable. But I'm like, that's not your decision to make. I felt like it wasn't their decision to do that.
So there's a regulatory body of the stock market. It's called the SEC.
Mm-hmm.
And their job is to protect the consumer.
They weren't protecting us.
So they have laws in place that these exchanges have to abide by, such as Robinhood or Webull, TD Ameritrade, which is the one I personally use.
Mm-hmm. That stopped us from doing it.
Right. So those safeguards are put into place to protect consumers. But in this case, it actually ended up hurting consumers because no one was able to buy their shares.
Right.
When they wanted to sell. It was just sitting there. Right?
Mm-hmm.
So
in that situation, they didn't protect us. They protected the other people. The bigger people that had more at stake. I feel like, but so yeah, it's a negative and a positive. I mean, the negative is going to be if the market does crash, you know, that's going to be a negative for all those people that aren't educated in stocks that, you know, since it's been booming the past couple years, they're going to be in trouble.
So if you follow the sense commandments of business, right, there's one called E, which stands for entry, right?
I was going to say effort. Just kidding.
Effort.
Their effort.
Right, effort.
Entry.
Effort, actually, yeah. So to be successful, you want to make it where there's a high barrier to entry for other people to come into the space that you're dominant in, right?
Mm-hmm.
So that's why Amazon wants there to be a higher minimum wage. Because everyone that's a competitor with them would not be able to compete.
That's true.
Right?
Mm-hmm.
For example.
Because they wouldn't be able to find the workers, basically.
They wouldn't be able to pay the workers the price that Amazon and Walmart can afford to pay.
Right.
Because they're in the hundreds of billions of dollars. Whereas mom and pop is barely in the thousands of dollars.
Right.
You know? But so that's a barrier to entry. So what they've done with the stock market through apps like Robinhood, Webull, TD Ameritrade, Fidelity, Charles Schwab, they have made it where the barrier to entry is lowered. I can literally buy a partial of a stock if I only have $1.
It's pretty cool.
Right? There's no minimum to where you can start.
Mm-hmm.
So that has created a rush into the stock market. And whereas in the past, you would have certain variables on certain stocks that would cause the stock to be a good stock or a bad stock, those variables don't matter anymore. Because the people with the lower barrier of entry, they're going to invest in things they believe in. Not necessarily things that have good fundamentals of the stock market investing.
For example, GameStop.
So when you look at GameStop is, you know, if you do the math, GameStop's worth about $2, right? So, but what's it trading at today? $180.
Crazy.
But that's because the retail investor believes in that company, cares about that company.
Or you're talking about like us, people like us.
People like us, the retail investor, yeah, that's what we are.
Yeah. Oh, okay.
You know, they went into those stores, you know, as children, and played the games, rented the games, and that's caused that stock price to be higher than it is actually worth. And most people have been told to buy a stock and hold it. They don't buy and sell, they just buy and hold. That's been the
strategy,
the told strategy for years and years and years. You just buy and hold,
and then when you're ready to retire, you just cash it out and use that money. And I mean, that's what 401ks are.
Yeah,
right?
So that's what people are doing. People bought it and they're just going to hold it. But then there's some people out there that are traders, right?
I mean, that's kind of what happened with my stuff that I was invested in with that company.
Mm-hmm.
I forgot what it was. I don't know. It was was it ETFs?
Mutual fund.
Mutual fund. That's not the same thing. ETF.
Mm-mm.
Mutual fund. That's not stock market, is it?
Yeah.
But I mean,
mutual fund is a group of stocks.
I just held it. I mean, I've been holding it for, my grandma bought it for me when I was born, or invested in it, and then it just kind of grew. Like, it only really grew like $1,000 from the time I was born to being, 32. And it was like, okay, cool. It was like a little savings account, but at the same time, if it's not doing anything, like after 30 years, it hasn't really done anything but grow. I mean, it grew double technically, I guess, but 30 years, I made $1,000 when, you know what I'm saying? Like, I'd rather take that out and be able to put it where I want.
So why is Dave Ramsey's stock market advice so bad?
I don't know his stock market advice.
Basically, Dave Ramsey tells you to invest in growth mutual funds.
I don't know what those are.
So growth mutual fund is growth stocks that are supposed to grow over time. And it's a group of them in a mutual fund.
Huh.
Right?
They're supposed to grow. Who determines how?
Exactly.
Okay.
So past performance does not indicate what the future performance will be in stocks.
Right.
Which is what you're betting on in a mutual fund. Right? 80% of mutual funds don't beat the market or lose money every year.
That's right.
So, to me, giving the advice to invest in mutual funds is terrible advice. You'd be much better off to be either in an index fund or an ETF that at least tracks the market, so at least you're gaining what the market is gaining.
Right.
Because as more and more people invest, the market's going to continue to go up over time.
That's true. Because more people will be buying.
Right. And with inflation, the value of the dollar is going to decrease and the price will go up. Right?
Right.
And using the market, you can beat inflation. So that's why Dave Ramsey's advice is not good advice. Now, for him, it may be his way of diversifying in the stock market,
but
so that if one sector is down, another sector can be up, so you don't lose money.
Be told as the only thing to do.
Right.
Is that how he portrays it, or?
He portrays it as that's just how you should do it. Right.
Interesting.
But my personal strategy is I like Ray Dalio's strategy.
Which is?
It's called the All-Weather Fund.
Well, we talked about this last time.
So basically, no matter what the market is doing, the All-Weather Fund is going to make something.
Right.
I think the worst of all.
Being diversified in different things. Is that
Well,
what
you're diversified in risk with the already fund.
like having a silver, having
So
real
commodities
estate.
and certain percentages of those.
Okay. Yeah. Having stocks, having bonds. Like being invested in, dabbling in everything.
At a certain percentage level, which diversifies your risk.
Gotcha.
So the stock market is the riskiest of all investments.
Didn't know
Right.
that. Because it's volatile.
Because it's super volatile, right?
Okay.
Companies go bankrupt every year,
That's true.
and your stock will go to zero. That company goes bankrupt.
Isn't that what happened to GE?
So if you're trying to always make money every year, is it advisable to only invest in the stock market?
No.
There you go. Right?
Interesting.
It's like in the years the stock market is up, commodities might be down, such as gold and silver. If there's confidence in the market, there's not going to be as many people buying gold and silver.
That's true.
Right?
But we're going to be ready.
But if everybody thinks a crash is coming, gold and silver are going to be through the roof. Or Bitcoin, or whatever.
Hopefully Dogecoin.
Dogecoin.
Maybe.
So, the retail investor has definitely made it a completely different market than what the stock market used to be.
Yeah.
So, with this new age trend, you have to think differently than the people that invested in the stock market in the past. No longer is an evaluation of 10 to 1 price to earnings, something really to look for. Because, Tesla's trading at 1,000 to 1 price to earnings.
That's high.
Because the belief in Elon Musk. Right?
As the person.
Yep.
Not the company. Or both.
Both. I mean, just the belief that Elon Musk is going to achieve
So now,
what he set out to do.
So now more people besides the wealthy investor, there's more people involved now. So the mindset is different.
Right.
Is that what you're saying?
But yeah, so that a belief in the individual can change the perception of a stock. And there's people every month that are buying more and more Tesla. Not because Tesla is a good company, but because of the belief in Elon Musk.
Yeah, or it could be a good company.
Because now, it's not just about the fundamentals of that stock. It's about what the retail investor thinks about that stock,
right?
About that company.
Different mindsets are involved.
Right.
Different perspectives.
So when you go through the top 100 stocks on Robinhood, most of those stocks, the companies are losing money.
It's interesting,
right? But those stocks, a lot of them will be the future of the country if they make it.
That's scary.
Right? So
there's a list. There's a top 100 list on Robinhood.
Yeah.
Where?
On Robinhood.
But where? Is it on the app?
Yeah.
Oh.
You can also Google it.
I tried to do that, I think. It didn't work out.
10 minutes later after I show her.
I'm going to look because I'm going to start. I was thinking about that today at the kitchen table while I was working. What kind of what kind of investments can I do next? Invest in next.
There you go.
Oh, okay. Tesla's number 1.
Yeah, so of the 100 most popular stocks on Robinhood, Tesla is number 1.
I have an AMC already.
Mm-hmm.
GE's on here. Disney. I don't want like the ones that cost a lot. Though, you know.
Mm-hmm.
We had that at one point, CCIV.
But you can see that it's, you know, they're all name brands.
Interesting.
Right?
Yep.
Basically,
well,
it's all
good
stuff,
to know.
It's all stuff that people use every day.
Mm-hmm.
Right?
I mean, really, that's the whole point. And when you invest, like, you should be thinking about what you use every day, because you're contributing too to that company's success, and that reflects the stocks, right?
So the American dream, what's the American dream?
It's changed so many times, but go ahead. What do you think?
2 cars, a house.
Oh yeah. Okay, so it hasn't.
2.5 kids, a dog, good retirement.
Yeah.
So what are all these pension plans dependent on?
Stocks.
Stocks, right?
That's right.
Not only stocks, but mutual funds.
Because the companies aren't contributing to pensions now, so.
Right. There's no longer a defined benefit plan. There is a defined contribution plan. 401ks.
Meaning, like, you got to put your own money in to get it back later.
That's correct.
And you risk your own money.
That's right.
Okay.
And you risk it in what?
Mutual funds.
Mutual funds. And
No, thank you.
how many mutual funds make money?
We just said none.
Only 20%.
Oh, okay. 20%.
Only 20% of mutual funds make money.
You better hope your
Yours is one of them.
your little investment is in one of those 20%. You
know,
better hope your company picked the right thing for you.
I say, and we've been very lucky and very blessed to have this long bull market run, but it can't last forever.
No.
Right? Eventually it's going to go down. It's just, where is the bubble going to burst and how big is it going to be? Right?
That's scary. That's what I'm saying. The last one I didn't even notice because I was in college, living in my own world, in my own bubble. And I don't know if there was one before then. If there was one before then, when, you know, in our lifetime, I didn't know about it either because our parents did a good job of keeping that a secret. You don't know.
Because they were told to save money.
Right.
The old school way, save your money. Right?
Yeah.
So when you save money, what happens?
It doesn't grow.
Right, you lose. Because the bank is not paying you.
And the bank's interest rates fluctuate like daily.
Mm-hmm.
So I remember at one point I was like, oh, this interest rate is good. And then the next thing I look, I'm like, this thing is, like, it dropped. Like, maybe 2008, 2009. Like, it definitely dropped. Unless you lock it into a CD or something. But,
right.
like, and you can't touch that money when it's in a CD. But it locks in at that interest rate.
Mm-hmm.
But anyways, I thought that was crazy.
So what's the average American's number one investment?
It should be themselves.
Their home, right?
Oh, their home.
Real estate.
Yeah.
Right?
But I thought that wasn't an investment.
Now what's their number one investment for retirement? Now.
Themselves?
401k.
Oh, okay.
Right.
Yeah.
401k is a group of mutual funds.
Mm-hmm.
Now, at my job, we have a 401k. And when I did some investigation, there were funds that had 1% of a fee and funds that had a different percentage of the fee with the same stocks in it.
That's weird.
Right? So guess which one the 401k automatically put me in?
The one with the higher fee?
The one with the higher fee. That's
How
right.
does it do that?
That's just the way it's set up.
I mean, but how did it have two different fees?
Because it's two different mutual funds.
So
that's
who set that up?
I don't know, Prudential.
Oh, and they just picked that one for you specifically? Did you ask other people if they had that same situation happen to them? And did they...
I don't know.
Oh.
No, I didn't ask them. I told them, like, hey, go check.
To see which percentage you're in?
Yeah. That's what I'm saying.
Weird.
Normal people don't investigate this stuff.
That's weird, though.
Right?
Can you look at mine? Because I still have a Prudential account.
Okay.
Okay.
You're probably in the Highland, losing money every year.
I have no idea. I don't work for the state anymore, so...
You know?
Or federal government or government. So I don't get anything contributed to it anymore. But anyways, go ahead.
So not only do mutual funds lose money...
But you're paying fees like that?
But you're paying fees to lose money.
And higher ones compared to another?
Compared to index funds and ETFs, yeah. You're paying higher fees.
Interesting. No thanks.
Right? So... But that's also a retail trend now as well, right?
What?
So there's a big belief out there that there'll be an index fund pop. Because so many people are going just straight to index funds now.
Like what?
It's just blindly investing into index funds.
What are index funds?
An index fund is a group of stocks that follow the market.
Are we in index funds or no?
We are in ETFs.
That's an index fund.
An ETF is similar to an index fund, except that an ETF is sold like a stock instead of only at the end of the day, like an index fund.
So are we in those or no?
We are in ETFs, yes.
But we're not in index funds.
Correct.
Who would be in an index fund? What's an example of that?
Vanguard.
Oh, people are blindly... You're talking about on Robinhood?
And in their 401ks, investment accounts.
Oh, okay. Wow.
Because the index fund, theoretically, is better than a mutual fund because of the fee difference. Right? And an index fund is basically going to be at whatever percentage the market is. So if the market's up 6% that year, the index fund's going to be up 6% too.
Interesting. Okay.
So, but there's a theory because, you know, you're just blindly investing. Theory is that blind investing will eventually just pop.
Interesting. Is that... What do you feel about that theory?
So, if you get an S&P 500 index fund, well, the S&P 500 has certain companies that may not have the, you know, positive outlook like a Tesla, such as Philip Morris, which is a cigarette company, which is still in the S&P 500. Right? And still a cash cow because still so many people smoke cigarettes.
So you're randomly getting chosen?
Yeah, because it's still in the S&P 500. So that index fund is going to own that stock because it's in the S&P 500.
I think I'm lost.
So index fund is a group of stocks.
Right. So that's what I'm saying.
So if I get an S&P 500 index fund, which is the top 500 companies,
you're getting all of them.
I'm getting all of them. No matter if they're going up or going down.
But could one make all the other ones go up?
That's right. So
it's like a percent.
If Tesla's up,
small percentage of each one.
Yeah. So if Tesla's going up 2,000%, but Philip Morris is going down 20%, it still looks like you're
making money.
Oh,
okay. I get it now. Right. Yeah, for sure. That's like what jobs do, right? That's what you're talking about when you sign up for a job and they give you a 401k and then they take your money and then distribute it however moderate, slightly moderate.
Well, a lot of 401ks have switched over to index funds because of the index fund popularity, but yes.
Okay. I'm following now. Okay.
Right?
Yep.
So...
And you have to request that breakdown too. Like,
Yeah,
you
so
don't
you
really
got,
know.
so you still, in the S&P 500, you got Boeing, you got American Airlines, about to go bankrupt, you got,
like you better hope something.
you got the cruise lines that are close to bankruptcy, you got AMC that's popped off, which they're not going to go bankrupt because they actually got smart and sold stock while they were popped up.
And they got loyal people right here investing in them.
Well, just you. I'm not loyal. I'm not loyal at all.
I was loyal, and then I was like, nah, this ain't happening. You told me to sell, and I sold, but then I bought back in. Loyal. Because I'm like, we go to the movies, like, we're going to eventually go back.
We're going tonight, 6 o'clock.
Are we?
Out.
Seriously?
We can.
Okay.
Oh.
Are you ready?
No.
I want to go. Rude. I wanted to
Going
go.
to support AMC tonight.
I mean, I was ready. Now it got me all sad. I don't even want to finish.
You're fine. But
Exit left stage. I mean, that's right. It's left.
So, how do you invest in the stock market?
Who?
You.
Right, I haven't invested it. I mean, I'm investing in a couple right now, but I really haven't found anything new to invest in. But most of the time, you kind of talk to me and tell me what's going on and what you think you're going to do, and then I try to look it up too to see and wait a few days, and then I invest in it, and I get in lower than you do originally. That's how I invest.
So to me, the stock market.
How do you invest?
The stock market is the second easiest way to invest, right?
Yeah.
What's the first?
I don't know.
Real estate.
I was gonna say that, but it's not easy because you can't get a loan. So it's not. I hate to be like that, but it's not super easy.
So why can't I get a loan?
Because they made it super hard for you.
No, because I fell into social norms
Yeah.
and got a crap ton of student loans.
Right. So that you're not the only one. So
Right.
they say it's easy, but I mean, you have to meet the criteria, and a lot of people just don't right now.
But you can get 0% down USDA financing and own a home
I was gonna say real
if you
estate,
have worked
but
for 2 years
some of us have a hard time with that too.
or just got a job out of school,
Yeah,
right?
that's true.
So they've made it a lot easier. The same thing, they've lowered the barrier of entry. But this particular video is about stocks.
Mm-hmm.
So the first...
Not real estate.
Right. So the first, the easiest one,
Is real
because
estate.
it has leverage,
Is real estate.
is real estate.
The second is the stock
The
market.
second is the stock market. So you don't have to have... You have to have very little money to start investing in stock market. You can literally start with $10 a week and throw it into the stock market.
You have to know what to throw it into, though.
And theoretically, if you do that for 40 years, you'll be a millionaire. Right?
Mm-hmm.
Now, whether that dollar be worth anything, I don't know.
Yeah, that's true.
But
That's the gamble we have to take.
that's
too.
the theory, right? So, but the idea is to grow. So there's two ways to do it, right? You want to invest for the long run and invest for the short term, right? So for the long term, I prefer to use Ray Dalio's strategy,
All-weather fund.
the all-weather fund. So you're supposed to put 15% into your investments of your salary, right? So what I do is I take 10% of that and I put it into the all-weather fund. and I put it into a Roth IRA for retirement.
I don't do that.
Right?
Yep.
So, but then I take $1,000 every year, and I take that $1,000 and I try to flip it or trade. Just like a flipper would trade a house, or a flipper would flip houses, I do the same thing with the stock market.
That's cool.
Right? And the idea is you take $1,000 and you put it all into one stock. Preferably a stock that's going to double up. Like a Sundial, an AMC, a GameStop.
But you have to like know that though. Like you have
Absolutely.
to. It's
you
like
gotta
a
follow.
gamble.
You gotta follow trends, right?
Yep.
But what else are you going to be doing while you're sitting on the toilet? I can go look at Wall Street bets and see what they're going to pop this week. Right?
Apparently you can look at what all these rich people are investing in too. It's like public record.
Yep. So
I found that out. I haven't really started researching that, but I need to.
Yeah. So when you get to a certain level.
You can't do it right now.
No, when an investor is at a certain level, they have to file documents of what they're investing.
Every year, or
it's usually probably quarterly or monthly.
Do you know where to go to get those?
I do not.
Well, the quarter's almost over, so.
But those are not.
I want to go look.
Okay.
And see what they're investing in. But I mean, I see what you're saying. Those probably aren't the people you're going to follow if you only have $1,000 to invest in. So
you turn 1,000 into 2,000, 2,000 into 4, 4 to 8, 8 to 16, 16 to 32. If you have $1,000, you're 10 double ups to $1 million.
I know that's right.
So, what's the easiest way to $1 million?
Keep doubling up.
Just keep doubling up.
Double up, double down.
You can believe in Tesla. Believe in Elon Musk. Or you could go with old Jeff Bezos. Keep doubling up there. You could stick with Google.
I wish I was old enough to believe in Jeff Bezos when he first started that company.
You can believe in old Bill Gates, Microsoft. You hit the Apple train hard.
I don't use Apple products.
Which stock is going to double,
I don't use Apple products. Can't support them.
Okay.
Android. Samsung.
Right. But so that's my personal investment strategy. Being transparent. Right. And it may change. I was a big SPAC investor last year because SPACs were going crazy, right? But this year, everybody found out about SPACs.
And they went up.
So the entry price on SPACs went through the roof and then crashed. Luckily, I was able to see that coming.
I don't think I did, but it's fine.
All right.
I'm just saying, I think I still have SPACs. Like I'm holding because they went high, we bought in, and then
No, they're
they
down.
are down, and
I
I'm
say
holding.
they still may.
I'm holding until I can
be
sell
fine.
them.
So I think you have Canoe.
Yeah. Go ahead.
The Clover Health has popped.
I mean, most of mine I sold, like got my money out, and I'm just holding like whatever's profit I had.
Yeah.
So that I can pop again and I'll resell it.
So this is what I personally did last year. I took my stimulus check, $1,200, and I put it in the stock market into a company called Nikola. So I invested in a company called Nikola with my stimulus check. Nikola went from $11, which is where I got it, to $55. I sold at $36. which ended up being a mistake.
Because they popped to like 90.
Yeah, they popped almost to 90, I think. But, you know, I had it evaluated
at 36
in the 30s, right? And I think Nicola's sitting in like the teens now, right? So
Nicola.
just on that was a triple up, right? So I took the stimulus check out, $1,200, reinvested the 24, and I've continued on from there, right? And every person
it's
can
crazy because that was the first stock that you invested in,
right?
like on your own, and like I can't believe that it popped like the way it did, and that you know, not you did the right thing, but it still was like, dang, I wish you could have just stayed in there for a little bit longer. You know what I'm saying? And
sure.
like let it pop to 90.
It definitely would have been a lot better, you know, if it had gone 1,200 to 5,500 or 6,000. Yeah, that would have been great.
But I didn't think you were expecting the very first one that you picked to do that.
Absolutely not. I was up triple. You know.
Yeah.
So yeah, the first thing I invested in went up 900%.
Yep.
Right. I sold out at 300%. So I'm calling it a win. You know, and I continued to win. I won on Helion, same thing.
Mhm. Yeah, that's true.
And I still have CCIV.
I do too.
Right. So
I think.
basically same strategy.
Yeah.
Right.
Mhm.
Because electric vehicles are hot. It's a hot trend. Right.
Yeah, and also I feel like with our new leadership, president, you know, they're wanting to push electric cars
Right.
more too. I don't know if electric cars have gone up since he's been the president or not. I haven't really
Not really.
looked into it, but
So basically, you know, you're looking for the next Tesla, right? When you're buying electric vehicle companies, that's kind of what you're looking for. You're looking for what could be the next Tesla. What could go up 2,000% in a year, right? And you can sit on the toilet on your phone every day and research it. TD Ameritrade gives you that research for free. They give you free screeners. You know, I really like Yahoo Finance for that as well. There's a website called finviz.com that's got a good screener. You know, so I say it's always a risk to invest. You don't invest money that you're not willing to lose, right?
Right.
And that you don't have. That's a good one, right? Mm-hmm. So what are the dangers of stock market investing?
Are the dangers of stock market investing?
So 1, losing all your money. The company goes bankrupt.
Mm-hmm.
Right?
That's true.
2, you try to time the market.
And you don't time it right.
And you don't time it right. Right?
You invest too much, probably
You get
at a high price.
You use margin or debt to buy stuff, and the stock goes down, and you're forced to sell.
And you can't pay it off.
Right?
Yeah.
Those are really the dangers, right? Which is why so many people invest in index funds and mutual funds, because that gives you diversification. So hopefully if one sector's down, the other sector's up, and it's kind of a balancing act.
Right.
But I found that when you're doing that, you know, you basically always have something that's up and always have something that's down, so you're never actually making anything. So that's why I choose to have a different strategy. And when you're trying to pay $300,000 in student loans off, you think a little bit differently than other people.
That's true. Right. You try everything until something works.
So go to Ensorsale.com, pick you up a hat or a t-shirt.
I'm wearing a
That would be
t-shirt.
wonderful.
He's wearing a t-shirt
You know,
from Ensorsale.
wear clothes with meaning, right?
Yeah.
If you have a particular saying that you want to put on a shirt, shout us an email. We'll be happy to put it on the shirt for you.
That's right.
Design it and everything. For free.
Mm-hmm.
Shirt's not free, but we'll design it for free.
We'll design it for you for free.
You know.
Go buy a book from Amazon, London in the Googly Goo. It's a book that I wrote. We also have a part business ownership of Sin's Crunchy Jerky. Go buy you some jerky if you're hungry.
And saying if you want high quality jerky instead of
Hit it up.
the junk jerky that you get from the store, go to sinscrunchyjerky.com and get you a bag of jerky.
Yep,
You'll definitely taste the quality difference and see the quality difference.
that's right.
You know, and make sure you follow the podcast. You know, hopefully you got something out of this stock market video. If you did, comment down below and tell us what you thought.
If you didn't, ask us questions.
If you feel like it can help somebody else, make sure to share the video.
That's right.
And I'm Nate.
And I'm Meredith.
And this is the So What You Want to Talk About podcast.
So, what you want to talk about?
To the moon, baby.